We are not financial advisors. This is for entertainment and education purposes only. This video is not financial advice. You can lose money investing. You are liable for any losses that you incur from investing. We shall not be held liable for any losses you may incur while investing. Contact the licensed financial professional in your area for professional advice. Always seek independent financial advice before making any investment decision.
Hi everyone, welcome back to our ABCC's podcast again. This time around we will be talking about stablecoins, and with me I have Alan. Alan is our CEO of ABCC.
Hello everyone.
Yeah, so I think before anything, there are a lot of news about a certain stablecoin that Alan and I will be touching on shortly later as well. But today's topic is mainly on an introduction of what stablecoin is actually. So I know this is gonna sound a little bit rhetorical, but yeah, stablecoin is a type of currency that holds a stable price. And this type of currencies, they are actually created to take on the unstable crypto market scene and to ensure a stable ground for everyone. It also serves as what I call like a perimeter for people of comparison for the investors out there. So there are a couple of types of stable coins. There is the fiat-backed stable coins, the commodity-backed ones, cryptocurrency-backed, as well as non-collateralized. I think for this session itself, let us focus more on the fiat-backed stable coins. And yeah, maybe Alan, you can share with us a little bit on why do you think stable coins exist?
Yeah, I think hi Marcus. Yeah, I think the main reason for stablecoin exists in the world is usually it's quite difficult for fiat money like USD to circulate around the crypto world. And also, there's some restrictions or regulation of fiat money in different countries. That's also why a lot of people use stablecoins. And another main reason why stablecoins is important in the crypto world is to interact with different smart contracts as well. Like when you trade on the DEX, like we discussed in our previous events and previous programs, that if you want to trade on DEX, you have to be on a blockchain asset. So in traditional, say like the bank, the money in the bank is not a blockchain asset. So we need somehow to move it onto the blockchain world, move it in the crypto world, before we can use those to interact with other smart contracts or other programs on the blockchain. Usually, stable coins are most solid substitute of dollars. We do have like some really big ones now in the world, like the USD Tether, USDC, and also BUSD by Binance. They are most commonly known as USD-backed stablecoin. So they are collateralized by these companies, and they will issue a stablecoin token and send to the purchasers or send to the users blockchain wallet. So this way allow like investors to have to value the cryptocurrency in terms of fiat or in terms of USD monetary value. So there's a few advantage of having using this fiat-backed stablecoin. So one of the obvious advantage is since they're backed by USD with their USD reserve, they're fairly stable. Usually they're always back to $1 within a very short period of time. And also stable coins, at least a large one, they usually either licensed or regulated somehow, which can also be used as dealing. So they're pretty safe to use, and if there are any big issues, you can always go back to the issuers to exchange back to the USD. And then lastly, the exchange mechanism are quite simple as well. They can swap with USD fiat or swap to token like on a one-to-one basis or at a really low fee. Usually you just need to pay for the bank charge. But of course, there's a disadvantage, right? Like centralized using a third party to custody your USD and they giving you token, you have to have some sort of trust on this third party, which is a bit contradict to the whole crypto trustless system, right? But still, this is one of the, I would say, a disadvantage of having fiat stablecoin or using some sort of third party custodian stablecoin. Another thing is, I know some countries, like for example, China doesn't really allow these kind of tokens to be circulated. So, which is like before anyone actually wanted to use this kind of service, there's rules and regulations to be applied. Yeah, so I can give some like background on different stablecoins. So let's say I think the most common one, at least most people in Asia or knows, is the Tether, the USDT. So they were launched in 2014. I think it was like part of a Bitfinex service back then. Bitfinex was like one of the first exchange that introduced this USD Tether.
Yep, I think the founder is the same as the Bitfinex founder, if I'm not wrong.
Yeah, I think so. Yeah, the Bitfinex was one of the founders were one of the ones that also found Tether.
Yep.
So currently they're 72 billion market cap, with almost with like 50 billion daily trading volume transacted on different blockchain. That is definitely the most widely used stablecoin right now. Another one that's getting really popular nowadays is the USDC, the USD coin. I think they were like part of like Coinbase and Circle. Like the background is very US based. Like a lot of US company uses it. Currently they have a 54 billion market cap. And then also they having like a daily transaction volume of 4 billion. But a lot of people argue USD coin is more transparent because they do provide a very detailed financial and operational like audit reports, and they are also like they work in a regulatory framework within the US. What do you think on that, Marcus?
Okay, so I think for USDT and USDC, they are mainly they are actually stable coins that always tell everyone out there that they have enough dollars in their reserves to cover every single token out there. But that over time that has never actually been proven. So a lot of people are getting a huge amount of fears, especially currently right now with what happened to another stable coin called UST. So maybe I can touch a little bit on what UST is. UST is actually a stable coin as well. It's meant to be 1:1 against the US dollars. But this stable coin is a little bit different. They don't come out and say that they are actually backed by US dollars, but how it works is actually to create UST. You need to actually burn another token called Luna. So it makes it deflationary, and it is actually meant to also ensure the other token Luna, its long-term growth is sustainable. And to entice the traders and the investors to actually burn more Luna to create UST, the creators of UST, which is Terraform Labs, they actually offered almost close to 20% yield on staking through Anchor protocol. And before the whole saga of the depegging of UST happened, there was more than actually 70% of UST's circulating supply deposited into Anchor protocol, which was worth about I think about $14 billion, about that. And all of this was deposited into Anchor protocol. And there's also another part whereby there's also reserves that the Terraform Labs founder and CEO Do Kwon created the Luna Foundation Guard, which is LFG in short. And this consortium, if I can say, they only had one role, which is to protect the peg of 1:1 for UST. They had about, I think, $2 billion in Bitcoin reserves, and they also plan to expand it to 10 billion in the next couple of years. And what happens, why they also have this reserves is because anytime if UST drops below $1, the Bitcoin reserves will be sold, and UST will be bought with the proceeds. And if UST goes above $1, UST will be sold until it goes back to $1, and any profit will be used back to buy more Bitcoin to pad out the reserves. And that's actually how it's more of an algorithmic. It is an algorithmic stablecoin because these are the things that there is being done to ensure the peg of UST. So what actually happened? What is actually very interesting is on May the 7th, there were about $2 billion worth of UST that was unsticked and taken out of Anchor protocol. Like I mentioned earlier, there was about $14 billion stick in Anchor, and on May 7, 2 billion were taken out. Immediately, hundreds of millions of UST was sold, and such a huge amount of selling of UST actually dropped the price the price of it to 91 cents against the dollar. And traders tried to take advantage to arbitrage. I mean, they would try to arbitrage and make some good profits there, I would say. But the issue is, the issue with this whole UST is only 100 million worth of UST can be burned for Luna per day. And that is where the whole depegging issue started, because there was too much that was being sold, but they couldn't burn Luna fast enough. And not only that, because the market conditions weren't looking very, very bullish as well. So a lot of investors actually flocked to keep selling their UST because they think that they realize this issue. And as it went on, UST just kept plummeting, kept going lower and lower against the dollar. And it was I think in the week following the initial pegging, it dropped to about 30 to 50 cents against the lot. And not only that, actually the Luna holders suffered the most. Luna actually took a huge whacking. I think, if I'm not wrong, I saw like most of the time it's like 99.9% if it's like dropping all the way. But if I'm not wrong, I saw it was 100% because there is no way that it's going to be 99.9% anymore. So actually Luna completely crashed and completely got wiped out. And this is where the entire stablecoin ecosystem actually took a hit. And this is where the investors also felt that is a more and more bearish outlook on that as well.
I guess this will be the end of part one, and next week we will continue to talk more about USD and what happened with the other stable coins as well. So see you next week.